For this discussion, I will be talking about profit planning and the cost volume profit analysis. First, let's know the objectives first of this chapter. We have to understand the importance of contribution margin, to identify the different margins in the marginal income statement, compute the contribution margin in at least 5 different ways, to enumerate the underlying assumptions in cost-volume profit relationships, to understand the relationship of volume, sales, and cost profit, to compute the break-even point and targeted sales with profit, calculate margin of safety and relate it with profit, apply sensitivity analysis to marginal income statement, determine and explain operating leverage, and lastly, draw break-even graph and cost-volume profit graph. Now, the last 3 will be discussed in the next video, while the rest I will be discussing it today. So, let's start with defining what profit planning is. Profit planning is anticipating the effects of variables affecting profit to measure its outcome. What are these variables? These are your cost and your units or production units. So, those are your variables. You also have the sales, diba? Or the sales price. Kana, it's also part, or it is also a variable of your profit. So, how do those variables directly affect the profit? So that is what basically profit planning is all about. So of course, you will not know how to get the profit without understanding what are those factors that affect profit itself. So those factors will be discussed later on. Also, given those variables, you can say that profit planning directly relates to the normal operating activities of an organization and is usually short-term in nature. Now, in profit planning, management uses the variable costing system, or also known as the marginal costing system, or the contribution margin approach. So again, those are the different terms that all refer to the variable costing system. Now, when we say variable costing, it stresses the relationship of sales to profit itself. And what are those factors again, or the variables included therein? Now, one of those factors is that we've already discussed in our previous discussion when we were talking about the cost behaviors. So, we were talking about the cost aspect ra dito. Cost aspect ra atong na discuss, no? So, you already know how to classify a fixed cost, classify a variable cost. You already know the methods on how to allocate or how to identify how much is allotted for variable cost, how much is the fixed cost, diba? So you already know those process in relation to cost. So as a recap, diba, you know that your total fixed cost doesn't change regardless of the volume of units of your product. So meaning independent ang imong fixed cost ra sa imong again, independent na imong total fixed cost sa imong production volume. However, your fixed cost per unit is mao na siya ang mo change as the volume of your production changes. So again, your total fixed cost remains constant regardless of changes in production or changes in sales. While your fixed cost per unit changes in direct relationship to your production level or your sales level. Now, on the other hand, variable cost or your total variable cost has a direct relationship with your production level or your level of sales. So, if there's an increase in your production level, thus there is also an increase in your variable or your total variable cost. Now, if we look at it at a per unit level, opposite siya sa imong fixed cost. Your variable cost per unit does not change regardless of the change in production level or sales level. So, kana inyo na siyang dapat timailhan. So, we've already discussed that in our previous topics. Now, given that you already know how to identify the variable costs and the fixed costs, let's talk about the other factors that affect your profit. So we have here the contribution margin. Now, contribution margin is basically it is the difference of your sales and your variable costs. So, I will show you the performa entry. So, here, you can see your contribution margin is the difference of your sales and your variable costs. So, again, that is why it is important for you to know how to identify or to determine how much is the variable cost. Now, given that it is sales less your variable costs, it is then your contribution margin that absorbs your fixed costs and contributes to profit. So, your contribution margin less your fixed cost is of course your profit. So, mora siya. Gipacharchara ng absorb fixed cost. Pasabot ra na kahit di ba ang contribution margin man imong kuhaan sa imong fixed cost. What is remaining is of course your profit. So, thus, a peso increase in your contribution margin is also an increase in your profit, meaning direct ang relationship sa imuhang contribution margin ug ang sa imuhang profit. So again, mo na ang hinumdumi ha. Your contribution margin has a direct relationship with your profit, meaning an increase in your contribution margin would also translate to an increase in your operating profit. Now, if we expand na to na siya, so ang expanded ra is kani sa ato ang variable. If you are able to identify the variable cost of goods sold, ilas na siya sa imong sales, so you get the manufacturing margin, and then you less the variable marketing and admin expenses. Like for example, imong mga sales commissions, diba? Those are your variable na marketing expenses or admin expenses. So kana, you would still arrive at the contribution margin. So ang ipasabot din na variable costs are those included sa imuhang cost of goods sold ug katong mga apil sa imuhang marketing and admin expenses na variable. Again, variable, marketing, and admin expenses. So, don't confuse yourself. Now, in our discussion is ariyan ta focus sa condense. Kaniya to ang mo to ang gamiton, no? Ang sa to ang condense nga format. Now, let's move on to the basic assumptions in profit planning and CVP analysis. Now, the assumptions of the following variables as they relate to profit are as follows. Because, diba, again, as mentioned in the definition of profit planning, it is anticipating the effects of variables affecting profit. Now, as you can see here, the first variable is sales volume. So, first assumption daw, your sales volume changes. And then, your unit sales price, unit variable costs, total fixed costs, and the sales mix remain constant. So, mo na imuhang basic assumptions sa imuhang profit planning. Again, nganong assumption pa man siya, diba? Profit planning pa man ta. Planning pa man niya ito ang gibuhat. So, these are just, naakay mga budgeted, and then, napud kay sa kanang mga actual na nimo, ana. So, there is, mo lang ni siya ang mga assumptions nga kailangan nimong hinumduman. We have, again, all other things constant, sales price, variable, fixed, and sales mix. Only the sales volume changes. So, maglahi-lahi ang sales volume, either per month ba, kada period ba. So, it it depends on the company. Now, as you can see, as again I mentioned, since these are just for planning purposes, maunang ang kanang mga all other factors din ha is considered siya as constant. Now, if we talk about CVP analysis or cost volume profit analysis, it is a process of managing costs and sales volume as they impact profit. So again, you manage the costs and the sales volume in relation to your profit. Mo na siya ang nasa imuhang CVP analysis. Now we have the basic CVP analysis assumptions. First is on the area of linearity and behavior. So, according to this, is that the behavior of your sales and costs is linear within the relevant range. Meaning, total fixed cost remains constant but unit fixed cost changes. Or kato akong gi-mention ganiha about katong cost behavior nga previous discussion. So, mo na siya ang imuhang linearity behavior. But if you can remember in the previous discussion, is natoy katong graph nimo wherein your fixed cost was just constant and then your variable cost was also slanting or siya. So, di ba going up ra siya. So, kana siya, mo na siya ang imuhang linearity and the behavior of your cost. So, those assumption or that is one of the assumptions sa imuhang CVP analysis. Now again, the unit sales price assumption is that your unit sales price remains constant. And then your assumption about the product is that there is only one product unless it is explicitly stated that there are more. So if there are more, you need to get the sales mix ratio, which we will be discussing later on. And that sales mix ratio is also constant. So, mo na imuhang dapat hinumduman. Now, in relation to your work in process inventory, it is assumed that there is no work in process inventory under CVP analysis. So, mo na ang assumption, we have no work in process. Now, as to production, it is assumed that your production is also equal to your sales. So, meaning, wala kay finished goods, inventory, and ano siya. So, meaning there are no changes in your finished goods inventory. Kung unsa ang imuhang ma-produce is mao pud ang imuhang mabaligya. So, mo na ang imuhang mga assumptions under the basic CVP analysis. There is that basic CVP analysis pa na siya because later on, there is a sensitivity analysis. So, for today, or for this discussion, is that we'll just be talking about the basic CVP analysis. So, what are the areas or the topics that is covered by the basic CVP analysis? So, we have the computation of the contribution margin, computation of your break-even point, margin of safety, the profit setting, and the sales mix. So, let's start with our contribution margin. So, let's start with the contribution margin. So, we have this example right here. TXT company established the following information for its profit planning activities. So, you are given these activities or these data. Kanirang available na data sa imuha. So, let's change it to highlight the data. So, you are only given this data. The unit sales price, the unit variable cost, the total fixed cost, and the units sold. So, again, if balik ta sa assumptions, these factors or these variables are assumed to be constant. Diba? So, constant sila atong assumption ani. Now, we need to, or what is required for you is to compute for the contribution margin and all the things related to contribution margin. So we have the unit contribution margin, the contribution margin rates, and all the other rates. So if maka-remember mo, diri kanisha, this was your condensed na formula, diba? So you have here already is your sales. Kaba na your sales is 5,000. So meaning, of course, your variable cost units is also 5,000 because again, diba, you have the assumption that your production equals your sales. So mo nang same na ang imuhang sales o variable cost na units because of that assumption. Production equals sales. Now, you multiply or you are given the unit nga price and then the unit variable cost. So we have 350 and 190. So to get the amount or the peso value, just simply multiply the unit price with the number of units. So you have here 1.75 million and 950,000. Now, the contribution margin is again the difference of your sales and your variable cost. So the difference, 1,750 divided by 950 is of course 800. So 800 then is your contribution margin in peso. Total na siya, total contribution margin in peso. Now, if expressed in units, it's simply the kato na mga unit cost or unit price. So, 350 minus 160. So, you have the unit contribution margin of 160. So, again, ato na siyang i-listen of color. So, 160 is your unit contribution margin. So again, how to get the unit contribution margin? It's simply your unit sales price less your unit variable cost. So that is your unit contribution margin. As to the peso amount, simply deduct. And then you are also given the fixed cost, which is 380. So you have a profit of 420. Let's take this out so that it won't be confusing. Okay, so you have a profit of 420. Now, how do you compute for the contribution margin rate? Contribution margin rate is your rate in relation to your sales. So, mo na siya ang imuhang contribution margin rate. So, in this case, pila ka percent sa imuhang sales ang allocated to contribution margin. So, that is your contribution margin rate. And as to the variable cost rate is pila ka percent sa imuhang variable cost ang imuhang, pila ka percent sa imuhang sales ang imuhang variable cost. So, that is your variable cost rate. So, na diri, it is stated sa gipakita diri ang in peso o in units. So, here, for the contribution margin rate or CMR, we have, tara, makita na ninyo ang formula. It is your total contribution margin divided by your total sales. So, mo na siya ang imuhang rate nimo. So, kana siya. And then, as to the variable, same. Ang na-change siya is your numerator. Instead of contribution margin is variable cost na siya. So, that is how it is easy to get the rates. So, that is in peso. If ang available information is in peso, and then if in units, if ang available information is in units, so still same, 160 over 350 for the CMR, and 190 over 350 for the VCR. So, as you can see, dapat parihas na ang imuhang rates in whether in peso pa na or in units. So, if di ka na pariha, na something wrong sa imuhang either units ba or pag imuhang pag-multiply nimo na something wrong. So, kana parihas gyud na ang imuhang rate regardless kung makuha nimo siya using the pesos or makuha nimo siya using the number of units. So, that is how you get the contribution margin rate. Next is let's try to get the break-even point. Which break-even point again is your break-even point. It is when your total sales equals your total cost. So, mo na ang imuhang break-even point. Oh, before moving on to break-even point, let's go back to contribution margin before I forget. So, as you can see here, even if you are given only 4 items, there are a lot of ways na on how you can get your contribution margin. So, dili ra kay inanan ang way nimo sa pagkuha sa imong contribution margin, no? So, if you analyze further, you can see here, di ba nga, your contribution margin is, of course, if ang available nga data is only your fixed cost and your profit and wala niyang imuhang sales price o ang imuhang variable cost, again, if what is only available is your fixed cost and your profit, mo nang gihatag. So, getting your contribution margin, it is your fixed cost plus your profit. So, imo na siyang i-work back. So, that's another way of getting for your contribution margin. Now, if ang gihatag ra is ang imuhang unit contribution margin, or if kani siya is given na siya daan, you just simply multiply it sa imuhang units sold. So, kani siya. Of course, it's also at 5,000. So, again, if ang given ra is your UCM and your units sold, so to be able to get the contribution margin, simply multiply. Then, another way is, if ang ipanghatag ra is kaning mga percentages, diba? So, if you are only given the total sales, then you are asked to get the contribution margin, given nga naa kay contribution rate. So, simply multiply the sales by the contribution margin rate. So, maabot kaning 100. Now, what if ang given is your variable cost and then ang gipangayo sa imuha is your contribution margin? So, mag-work back pa ka to get the sales and then i-multiply nimo siya by the contribution margin rate. So, if you are given these rates ra and then kanipod, so kanira ang mga given, muna siya yung mga given ra, then you are asked to compute for the contribution margin. So, it's simply the variable cost divided by your VCR, variable cost rate, para makuha ni mo ang 100%. So, once nakuha na ni mo ang 100%, which is 1.75, i-multiply ni mo siya sa imuhang CMR to get the contribution margin. So, again, sa kani palang daan, like this whole thing, daghan na kaayog pwede ma-question, daghan na kaayog ways kung saan mo pagpangita, diba? So, if you are asked for the profit rate, so profit rate is simply ang imuhang profit in relation to your sales. So, mo na siyang imuhang profit rate. So, ana ra siya. Mo na imo ra jud ni siyang hinumduman, or kani gyud ang kani nga proforma gyud ang imuhang basis. Kay hana kay ways ka pwede ka libog-libogon or dili tanang data is ihatag sa imuha. Pwede ra kay hatagan ra kag profit, hatagan ra kag mga rates, di ba? So, ang ipangutana sa imuha is ang unit price, di ba? So, kana siya, you need to understand and analyze what is given and the problem itself, di ba? Para kabaw ka kung unsaon pagkuha, kung asa siya pangitaon, unsa nga mga information ang needed para ma-arrive ka na. Because, para sa example gani ha, kani siya, if kaning tulo ang given ra, and then you are asked for the contribution, if you are asked for the contribution margin, so, di ba, dili dayon diha nga one step is makuha dayon nimo ang contribution margin. You need first to get the sales para makuha nimo ang contribution margin. So, that is why you need to remember gyud katong performa kani. Stick with this and analyze how you can get the needed na information. So, dili ra kay one step wonder ra nga kaisa ra given na everything. So, usually it involves 2 or more steps before ka maka-arrive sa kung unsa man gani ang gipangita. So, kana you need to read what is asked and then find out how you can arrive at that gipangita, at that requirement, and then work with what you were given. So how do I use this information available to arrive at the answer? So mo na siyang imong thinking dapat. So dili ka mag-expect nga ihungit na nimo tanang given or ihatag na tanang given diha nga ora igura ka magpili kung asa imong answer. No. Dapat magtimaan jud ka ani sa imong formula or katong sa proforma. Now, those are ways on how you can get your contribution margin. Now, balik ta sa ato ang break-even. So, I know you're already familiar with your break-even point. It's basically your sales equal your total cost. Meaning, diba, sa imuhang break-even point is that there is no profit or loss. So, kani siyang profit dire, dapat kay zero na siya kung mag-compute ka sa imuhang break-even point. Now, break-even point can be expressed in either units or pesos. So, for your profit to be zero, it is best to assume na to get a profit of zero, your contribution margin should be equal to your fixed cost. Diba? Para ma-zero ang imuhang profit. So, muna siyang imuhang hinumduman. Contribution margin should equal your fixed cost para ma-break even ka. Now, how do you find the break-even point in units and in pesos? So, of course, you make use of your contribution margin pod. So, as to units, you just simply take the fixed cost and then divide it by your unit contribution margin. So, you have here, again, that is simply 380, your fixed cost, divided by your unit contribution margin. So, that is your break-even point na 2375. Now, let's try to see if maubagid na siya ang imuhang break-even point. So, if that is the break-even point, dapat ini-change na to ani og 2375, the profit would be 0. So, let's try to change it to 2375. Kaya mama na itong na-compute na break-even point. So, 2375. So, see, when your units sold is equal to your break-even point in units, your profit is equal to 0. So, again, ngano ang fixed cost man ang atong gigamit divided by the UCM? Okay, of course, at break-even point, your contribution margin is equal baya sa imuhang fixed cost. So, again, your contribution margin is equal to your fixed cost. Mao na nga ang fixed cost is ma-divide siya sa imuhang unit contribution margin. So, mao na siyang siya using in units. Now, if arita sa pesos, as you can see here, pag change po na to sa units sold, the peso also change na po. So, see here, the same siya og break-even na amount. 831,250. Now, how do you get that? It is simply your break-even point divided by your CMR. Again, ngano sa CMR man na to siya? Kay, di ba, balik-balik ta, your contribution margin is equal your fixed cost. So, para makuha na to ato ang break-even sales or in peso, gamiton ra nato ang CMR sa ato ang gamiton na nato ang CMR para makuha ang ato ang break-even point in peso or makuha na to ato ang break-even sales. So, kana siya. That's how easy it is to get the break-even point. So, kana ito lang siyang blikon. Now, if you are asked to compute for the break-even rate, The break-even rate is simply the rate of your katong solve di mo break-even as to the sales. So, kana siya in relation to your sales. So, mo na imong break-even na rate. Now, again, whether may units man na siya or may peso, same gyud na dapat ang imuhang break-even na rate. So, if makabantay mo, ang atoang 100% per me or hour base is the sales. Again, ang atoang base kay ang sales. Now, let's move on to the margin of safety. Now, what is your margin of safety? Now, margin of safety is the difference between your budgeted sales and the break-even sales. So, unsa man ang imuhang budgeted sales? Your budgeted sales is of course dire ang ari ng imuhang units sold. Diba? That is considered as your budgeted sales na. So, again, it is your budgeted sales less your break-even nga sales. So, as to units, simply 5,000 minus your break-even in units, break-even sales in units. So, we have 2,625. Now, if peso pud siya, ato rasad ka sa peso mo tan-aw, 1,750 minus your break-even point in peso. So, that is your margin of safety in peso. Now, how do you get your margin of safety rate? Kani siya. How do you get the rate? Again, ato ang 100% sa rate is ang ato ang sales. So, our MSR is simply our margin of safety, whether in units or in peso, divided by the sales either in units or peso. So, kung units ang atong gipangita or if units ang available nga information, your MSR is simply your MOS in units divided by your units sold or budgeted nga sales. And then, for in peso sad is ato po ta sa peso na values. So, your margin of safety in peso divided by your sales. So, mo na nga to ang MSR rate. Oops. Okay. So, again, dapat kay same gyapon na whether in peso or in units. Now, what have you observed, di ba? Kasagaran nila ang ilahang basis is ang imuhag yung sales, di ba? Your sales is always your 100%. So, sa MSR, if makabantay mo, ang iyahang gideduct sa imuhang sales is your break-even point. Again, ang gideduct niya sa imuhang sales is your break-even point. Now, remember, what is your break-even point? Diba, your break-even point, it is when your contribution margin is equal to your fixed cost. So, kung unsa may sobra sa imuhang budgeted sales ug sa imuhang break-even point, of course, that is automatic nga imuha na siyang profit. So, meaning, di ba, ang kani imuhang margin of safety nimo kay kuha na siya, margin of safety nimo kay nag-indicate na siya na naa kay profit. Kagets ra? So, again ha, ako ibalik. Your margin of safety, giunsa siya pagkuha, it is your sales, your budgeted sales, minus your break-even point. Now, your break-even point, it is when your profit is equal to 0. Your break-even point is when your fixed cost is equal to your contribution margin. Your break-even point is break even na nimo siya. So, whatever is sobra sa imuhang sales less your break-even point, nag-indicate na siya na naa siya'y profit. Meaning, the margin of sale, no, not margin of sale, margin of safety indicates there is profit. Kagets siya? Tungod kay naa man siya'y sobra sa imuhang break-even point. So, for example, butang ni na to dere that this is 2375. Diba? Kana. As you can see, imong margin of safety is at 0. Kay of course, wala may sobra ang sa imong budgeted sales o sa imong break-even point. So, meaning wala kay margin of safety, meaning wala kay profit. If tan-awon po mo diri, your profit rate is at 0. Now, if balik ko na to, see, the sobra translates to your profit. Now, another thing, diba, as mentioned a while ago, katong nag-discuss ta about contribution margin, that if there is an increase in your contribution margin, there is also an increase in your profit. So, see na mo gamay sa relationship. Si margin of safety nimo, kada naa siya increase, or diba, its increase indicates an increase in profit. Now, si contribution margin nimo, its increase also indicates an increase in profit. Diba? So, if imong huna-hunaon gyud pag-ayo, basically, diba, in order for you to get your profit, it is just in order for you to get your profit, makuha ra nimo siya even if ang gihatag ra sa imuha is the margin of safety and your contribution margin rate. So for example, ang gihatag ra is kani imong margin of safety and this one, diba? If more na siya given and then you are asked for how much is the profit, so maka-arrive ra gihapon ka sa imuhang profit by simply multiplying your MSR times your CMR or contribution margin rate, not MSR di, margin of safety in peso times your contribution margin rate. So, let's try. So, see, ni-equal siya sa imuhang profit ra kung pagkuha na to ganiha. So, again, even if you are only given the margin of safety and the CMR, maka-compute gyapon ka sa imuhang profit. So, that's basically your margin of safety in peso multiplied by your contribution margin rate. Now, what if, diba, given nga ingon ana, you can then see the relationship between your MSR and your CMR. So, your ratio, kani siyang 24%, one way of getting that is simply multiplying your MSR and your CMR. Diba? If you can see. Kaya nga to ang margin of safety nga peso god ganiha in peso is gimultiplier ba ito sa ato ang CMR para makuha ang profit in peso. Na if you are asked for the profit rate, net profit rate, so ang gamiton na pud nato is ato ang margin of safety na rate times the CMR. So para makuha nimo ang rate, which is, as you can see, di ba? Parehas siya sa atong computation ganiha nga 24%. So, there are a lot of ways on how you can get the margin of safety or the profit or the CMR, di ba? Pwede man nga balihon pud siya nga what is asked is your CMR, then you are given the profit of the margin of safety ra. So, imo rang transpose ang imuhang formula, di ba? So, your CMR, para makuha nimo yung CMR, di ba? It's simply your NPR divided by your MSR. So, mag-remember ka ng triangle. Triangle, di ba? Kung kinsa ang nasa babaw, kinsa ang nasa ubos, both sides. So, ina na siya. Unsay triangle? Kada go atong i-triangle, ani na to. Ang nasa babaw is your NPR. Oops. NPR. Then, there is CMR. And then, your MSR. Diba? Kanagong triangle nga formula na mura siya, dila siya triangle dire, pero in getting your CMR, diba, it is your NPR divided by your MSR. In getting your MSR, it is your NPR divided by your CMR. In getting for your NPR, it is your CMR multiplied by your MSR. So, kana na triangle akong gipasabot. So, kaning diri nga part is multiplied na siya, and then kana siya is naka-triangle. So, naka-triangle, kana underlined. So, kana siya. Mo na siya. Ang imuharag yung timailhan. So, it works either in rate basiya or in peso. Again, it works either in rate or in peso or in units because again, same ra yun na siya, diba? Same ra na siya either peso or units. So, if ang pangitaon ni mother is net profit and then what is given is your CMR o niya MS in peso, so di ba magamit gihapon na nimo siya because again, makuha ra man na nimo ang rates using po natong mga sa peso. Or if units baro nang gihatag, still you can make use of it. So, kana na siyang imuhang timailhan gyud. So, as you can see, daghan kayo relationship or there are a lot of ways on how you can arrive at a certain requirement using a given requirement. So, dili ra ka mo stick nga, ang contribution margin is makuha ra gid ako siya kung na ako sales of variable cost, di ba? So, like, what if ang given DI is your margin of safety? Or what if ang given DI is your break-even point, di ba? How do you get your contribution margin? So, kana, you understand the relationship between each factor. Imong sabton kung unsa ang ilahang, how does one factor affect the other? So, ana lang na siya.